Hey, good morning, everyone. Welcome to the brief. June 11th, Thursday, big red day in the futures. If you've taken a look at that yet, so that's probably gotten your attention. I already put in the comments there. This is kind of the exact, we always think long first because that's the important part. So we'll talk more about how this day is in relation to what we've had as far as market action for long. But also in your hip pocket, even as a long-term investor, today's the day you wake up and you start scanning for those shorts because there's going to be a lot of selling, in my opinion. So you've already got some already, and you should probably see some wholesale selling out today. So we'll see how that turns out. But again, welcome to the masterclass of disciplined investing. We're going to talk a lot about discipline today and how you handle down days in long markets. And is this the big one? We'll talk about the roller coaster analogy. Those things you hear me say, we'll just talk through that to make sure that we are on the same page. So mission objectives, we like to grow our money, protect our money, and live off our money. Well, today is one of these days where you start thinking about protection. And we're going to talk about, is it headline? Is it the elections coming up? What is it that's driving the market down? And what to do to our long-term portfolios because of that. I can always tell you days like today are busy days for me. Talk to a lot of folks out there. As far as our tactical objectives, already I had it planned yesterday on stocks to hold through a downturn, and here we go. We'll see. Down 3% pre-market or so. I do anticipate that going a lot more red today. We'll see. Got a good jobs number. That's nice. And then our academic topic of the day, which we're overdue on talking about, is market circuit breakers, which we may see. And if we see it, I think we'll see it literally within about 3 minutes of the open. We'll see if we hit the overall market circuit breaker. Again, that's the S&P 7% down, brings everything to a screeching halt. And then, of course, there's individual stock circuit breakers, which we've seen multiple times in the past couple days. So, well, let's talk about those. What are the exact rules that go into place there? So we know, especially in the trading mentality, hey, how do we want to have our trade set up and come out of a circuit breaker like that? All right, our flow will be long, short, open, short, long. If we do get halted today, I'll probably mute this, and I'm going to be working on something real quick because there's really nothing to talk about when they're long. So I'll be off on a side project for thinking about getting things ready to wicker some portfolios around. But I'll stay online, and then when the market opens back up, that's when I will come back on talking about the action that we see from there. Okay, market review, headline review, long-term investments. You see the 6, I call them best of breed names there that you could hold. There's some honorable mentions. ExxonMobil's an honorable mention, and BlackRock are honorable mentions, but we'll get to those here in a minute. And those, of course, are all going to be in the red today. But we'll talk about short-term day trading opportunities and execution. We'll get to Q&A, and there's tech support if you need it, standard disclaimer. Okay, let's see what is going on in the market right now. Again, about 3% down, but it's days like today, and in my other line of work, I'll be putting out a video tonight almost assuredly talking about this exact same thing, and I'm leading with this chart, is let's look at where we've been in relation to the year. So days like today, there's going to be a lot of emotion. If you watch financial news like CNBC, Fox Business, whatever, there's going to be ugly things out there. All of the bears, Jeff Gundlach will be on today, half of the day, saying, I told you this was coming. The market's crashing. You got to get into bonds, blah, 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 blah. It's the broken record that he puts out every day. And 5 days of the year he gets to be right. So that's all you're going to hear on the financial news. But look at this picture, okay? Look at where we've been. We had the big run up. You know that. We had COVID-19 that showed up and government shut everybody down. And then you've had this kind of epic run. In the middle of this epic run, look at these big red moves, okay? They're in there. Gosh, we just had 7, 8 green candlesticks, and actually since we got down, if some of these days end up with miracle recoveries, you could end up being green here even though the overall market's down. Look up candlesticks and how they work if you want more on that. But yeah, is this, when you look at a 1-year chart, if this dropped down to the 310 level, is that a big deal? Not at all. I even yesterday said something, Tuesday, I said something about if the market came in 10%, that'd be normal. So I don't have a regression line on here, but if you take a regression line, at least in the short term, it's going to cut across, you know, this level, which means we're way above the short-term moving average type stuff. So, you know, even if the market comes down 10%, I'm still not worried. I'm more worried about the election and how it's going to handle then. I'm not worried about a sheer correction in the market, because that would be normal. Look how much we've run up. If you look at the indicators, RSI indicator, flash in red, that's a sell signal. Long-term investing, you don't just sell because some indicator sells, but it is something to think about. And then you got the MACD up here, well above its normal range. So honestly, a normal move back down to even 300 or so, not even a big deal. Now, our market lately has been basically doing this on one day, so it'd be kind of nice not to do it all one day. But that gets everybody excited. But hey, market move down, no big deal. Okay, let's take a look at the 5-day. So trucking right along, we've seen some choppiness, okay. And then yesterday, yep, okay. And then boom, basically negative to last night. And then we wake up this morning, let's try, no, let's not. So we'll get into headline review on what's actually driving this. Earnings are out, but I'm not even going to go into that today because it pales in comparison to the headline stuff, which we will take a look at now. Okay, around that 3% down is what we're looking at. You'll see CNBC pop up here in a second. Do a quick refresh, make sure we're all on the same page. So you do see the big move down in the Dow. All right, look, the NASDAQ though, the NASDAQ has been the one that's been on fire. We hit 10,000 for the first time ever yesterday. So that's all your tech stocks, if you think, that are running up. So that is good news that it's not the big tech names that are down. You know, Apple's not down 10% pre-market. You know, that's what would really be exciting, if you will. Exciting in a bad way, I should say. Okay, so what's happening in Europe? Generally, it's been all good news across Europe. All good news stories about opening, that sort of thing. And then we have this 3% sell-off across the board, basically. Again, not uncommon. I like to say reversion to the mean. I'll go into that later when I put out a video on specifically on this topic of what's going on. Asian, again, pretty much red across the board, not good. US, there's our move from yesterday of note. VIX above 30, that should spike. Some people take these big down days and trade the VIX long. I don't do that, but I'm open for that. So if somebody wants to take that as a side project to kind of watch the VIX and how it trades, I'd be interested in the future. I think there's potential for that. It's just something to keep an eye on. All right, let's look at the bond market. You know, yesterday the Federal Reserve said, hey, we're going to keep the rates low for basically until 2022. That was kind of a no-brainer, but yeah, but since it was said, now people had time to chew on it. So what did that mean yesterday? Well, it was, first of all, yay, you know, 0% money basically for another couple years. That means low refis, you know, all of the easy money for you to grow your business if that's your thing. From a downside, though, there's a big negative with that. Still, certificates of deposits aren't going to pay anything. So you're really, the only way to make money when you're sitting at zero interest rates for a long period is to go into the market. So when was the last time we sat at zero for a long period? Thank you. I just heard everybody chime in. March of 2009 to basically 2018. Pretty good time for the market. So yeah, we have the election in there. It is what it is. It's going to move markets. But really, when you think of a protracted period, and I think it'll be longer than 2 years before we can move back up in interest rates. But when you think of that, that's very healthy for the market because money has nowhere else to go. Or you'll hear the TINA environment. That'll start breaking onto the news one of these days about there is no alternative, because there really is. You can either open a business or you can invest in the market. Those are the only things that are going to be going up significantly there. So over to oil. Again, a little bit of a drop there. We'd like to see that above 40. And gold, you're going to see a spike. Some people trade these things. I don't. You can have up to 10% in your, going into the election. If you want 10% gold in your portfolio, that's fine. I prefer silver, but they kind of act the same. Okay, let's get back to me clicking that button when I mean this one every day. So back to the headlines. Dow's down 900 now. Yay. Honestly, I think we circuit breaker out for no reason other than what's driving the market down. It's not really. The headlines have not changed from last night to today. They really haven't. Yes, there's bankrupt companies out there that have been going up. What? I think that little, we watched Hertz, we watched Chesapeake. There's a couple other names, kind of crazy. So, yeah, penny stocks have been on fire. If you're in those, I generally steer clear. I'm in one, Clickstream. No, Luckin's not a penny stock yet. Give it time. Too soon? Okay. But yeah, Luckin's pretty low and not doing well. But yeah, there's some really small stocks out there that have been up like 100% plus or a couple hundred. So not too worried, but I think we could limit out easy in the first, just from profit taking, not because of anything else other than, gosh, we just tacked on like 50%. Most people are up if you have a deft money manager or you're kicking butt yourself. So it's like crazy gains in a short period of time to take money off the table. So if people do that en masse today, then we're going to hit the breaker. If not, we're going to get close and then probably go back higher from there. Okay, we did get a good unemployment number or jobless claim number. That's a little bit different from unemployment. Jobless claims were less than expected. I think it was 1.5 and change. We expected 1.6 million. So we'll keep an eye on that. Police reform, that is pretty much all you're going to see on mainstream media right now. See some other headlines here. This is the headline, but I don't think that that's necessarily really what's driving the market. We've all been kind of mentally ready for the second wave. I think it's basically profit taking of, wow, everybody's looking at their portfolios and exploded higher. And it's like, man, you probably need to take some risk off. So I think that's what your money managers are thinking about. I think that's what your endowment funds are thinking about. They're not thinking about necessarily us going into the second wave. I could be wrong. Second wave is an easy headline, and you put the medical folks on TV and they can squawk all day long about what they think is going to happen. That chews up some airtime, but I don't really think that's where the money's flowing right now. Could be wrong. We'll stay tuned. Claims better than expected. We talked about that. There is the coronavirus relief talks. We'll see. If we do have, if we strike down in the red and limit out today, or basically the market comes in around 10%, which still leaves us above the channel that we just exited on the SPY, I think that will bring the whole relief package back into play. Let's mail everybody checks or gift cards. All that craziness will come right back, in my opinion. Hotspots in Africa. Okay. Vaccine. This would be a big deal if they extend the $600 in unemployment. Remember, that's a per week thing. So that ends at the end of July. If they kick that out through the end of the year, again, that's a negative motivator for folks to go back. If you take that, we've done the math before in the room, about $48,000 a year if you're sitting there at these big unemployment benefits. So kind of crazy to see how that will play out. I think that will be a negative if we choose to extend that. So there's where we are across the markets. We'll go to Schwab right now and we'll take a look at these 6 stocks to hold through a downturn. All right, first of all, Apple, that's my fave. I try to look at it objectively, even though I've been close to it for so long. No, LK is not the stock to hold through the downturn. Or maybe there's news in LK, but we'll get back to that. Thank you, Berner. Apple, the best out there, luxury product, addictive product, must-have product for a lot of people. I'm on Apple stuff that you're looking at right now. It's kind of crazy, but that's what they are. They're moving into healthcare with the Apple Watch. They are moving into potentially the iCar eventually. They could have bought, Tesla back in the day. They can't now. But yeah, Apple just crossed $1.5 trillion market cap yesterday. Apple and Microsoft both did. They'll retrace that today. But if you want to put that in there. Apple basically best out there. Amazon, again, wave of the future. Everything's going Amazon's way. I would not get in front of that. If that stock drops down, if we see 2,000 again in that stock, it's time to buy a hand over fist in this downturn, because I don't think you'll see that again. BX is Blackstone. I would say that's not a mainstream name for everybody. It is for us. They're the best private equity in the world. The best thing that can happen in Blackstone's world is recession. Basically, everybody gets crushed. They're the buyer of last resort. They're taking your property off your hands when you're about to fall, when things are getting bad out there. They're the people that have the cash to turn around and make money. And I showed you that chart the other day. They're talking internal rates of return up in the teens. So it really is kind of a rich kid thing as far as to be able to participate, because you have to be an accredited investor. But putting some money into Blackstone, it's kind of fire and forget, like the old AMRAAM missile. So I've got a chunk in there, a small chunk, but enough that that's where I want my money. So consider. Google, again, it's really Alphabet, which is the parent of Google out there. Google's not going anywhere. You know that. I know that. Just hold the stock. If you get a better entry out of any market downturn, you want to increase your position, not decrease it. Facebook is a name that I left for a while and I'm back in. I think Facebook honestly has the best long-term projection. I don't care what it does. Facebook is going to print money in the election, in my opinion. Both sides, flowing money, trying to get their names, their people in front of your eyeballs, and the eyeballs are literally going to about 1.5 feet in front of your face on your smartphone and your tablets. So that's how they get it there. The whole let's go meet at the town hall and hear the particular genius who wants to be your bestie talk. I think those days are going to be significantly reduced due to coronavirus, and we don't really need to be in person all touchy-feely and getting hugged by Biden, that sort of thing. That's kind of on the way out. All right, so they print money from advertising, plus they have Facebook shops, which I haven't been on yet to check it out, but that just got released, I think, last week. Okay, and the last one I'm going to talk about is Home Depot. Home Depot, you could throw Lowe's in here too. I got it. Home Depot's run a little bit better from their management team. That's just that name that is always going to be there. When we have natural disasters that come in and wipe out large portions of the country, Home Depot benefits. People working from home, Home Depot benefits. It's hard to find a way where Home Depot loses, right? They're kind of perfectly positioned. The other two that I mentioned, ExxonMobil, there's times to be out of oil. If oil starts cratering, then you could leave Exxon or just hold through. Their balance sheet is unbelievable. So you look at BP right now, you think of all the trauma that they're going through. 10,000 job cuts, most of which are middle management, which is like, you have 10,000 middle managers to cut. Wow. It's like, that's unbelievable, because middle management generally is not the one, they're not revenue producing, right? So good on them, but they felt the need to cut 10,000 middle managers and that dividend. Everybody that works at BP will tell you that's the safest thing out there. Outside looking in, I don't know. So stay away from any names in the oil space except for ExxonMobil. In any downturn, you can acquire that. Again, nice big 5+% dividend. Okay, so that's what I've got for no, luck and coffee is not a hold through anything sort of thing. Yes, Biden back rubs. All those videos kill me. All right, over to the short term. Let's switch gears. Okay, when you think market down big, could we make a check mark today? We could. So what's the narrative of the market turning around at the open? Is there is no alternative, right? Money has to slosh in to somewhere. Well, today's a slosh out day. I think the markets run up so far so fast that we're not going to see that. Now, had we been limit down, 2 or 3 days in a row and maybe getting near a bottom, that's when you can see that kind of check mark move. I don't think we'll see that today. I think we'll see continued selling all day. So you're kind of safe, if you will, taking a name short for the day trading portion of this. All right, let's look across. I have not looked at this at all because I've been more worried about long-term stuff and portfolio adjustments. So we shall see. All right, Norwegian Cruise Line. First of all, anything in travel, cruise liners, airliners, those all worked yesterday. You know that. Carnival, Delta, United, oh my goodness. You name it, it's going to work probably. I don't know who's buying an airline on a day like today. So let's see. Norwegian, I think, moved the most yesterday to the downside. So out of these, and I'm going to look at United for the move down, as far as that's the one I'm going to track. Again, I think they'll all travel the same. I'm trying to think of who's going to get hurt the most. So a little bit of a dart throw there. You see a name we talk about up top on occasion, Neo Short. That stock has run up crazy. Let's go ahead and bring it up on the left. So yeah, let's go back to June 3rd on the lower left there. It's sitting at 480, just peaked out at, it's up in the above 6, bouncing around yesterday. That's got room to run to the downside for darn sure. Closed at 630. It's already down at 574. Nice small point. Small entry point. So you can buy a lot of shares, maybe get in with 1,000 or 2,000 shares, reduce that spread some. So that's a name that I like short. Plus they're kind of empty promises and people aren't trusting the Chinese right now. So when you think about portfolio managers taking out risky stuff in their portfolio, maybe they've been thinking about that for the election. Neo's a name that I could see being sacrificed. So I like that there. All right, let's go to the gainers. Probably not much on the next tab. All right, there's going to be some ultra short VIX. Obviously, that's going up. We don't trade any of that stuff. For a couple of pharmaceutical names. Grubhub gapping up. If you saw the headline there, they bailed on Uber and went with meals ready to eat or something like that. I wouldn't touch them either in this situation. Regeneron, not enough volume and not gapping up much. Let's look at the top 10 decliners. Boeing, goodness, down another 12% there. They're another name that's run up pretty big. Put them on the big board, if you will. We'll take a look at that. So that was Boeing, BA. Okay, when you look at this name again, it ran up to 240. It's already dropped back down to 180. You know I like this name long, but I could see that being one that sells off today. Again, if it gets back below 150, that's going to be a buy with both hands for long-term stuff. Let's see, not much volume or not many other qualify. Tesla's just a clear short, but I'm not sure today is the day. There could be profit taking in Tesla. Here, I'll write that down so I can burn my fingers off by even writing it. So that's what happens to me with shorting Tesla. Okay, you do see Google up there and Amazon as names that you definitely want to keep those. No, I wouldn't day trade those down. All right, let's look at the next tab. Again, most of those are trading vehicles. When you look kind of in the description zone, almost all of those are Direxion and ProShares almost across the board. So let's not touch those. And then the last one, we're probably going to see the same sort of thing under the description, mostly trading names. And not really looking to go along anyway. So let's go back to let's leave it on the tab of the decliners and look back at, see what names we have in the comments. Panic sells. KSS has actually bounced there. So let's put KSS. Looks like Predator's taking that short. This is a name I've loved and tried to make so much money in, but it fails me every time. So probably a good one to short. So this is Kohl's. So again, the reasons for it being good is because Kohl's has a relationship with Amazon. You return your clothes there, blah, blah, blah. They just hang them on the shelf and all is good. However, look at that stock price. 23, closed almost at 24, down to 21. No real news other than Kohl's is just a hated name. So pretty good idea there. All right. Nicola, excuse me. Yeah, I blew out of that name yesterday in the mid 60s. We'll bring it up here. I think that one has a lot of room to run to the downside. That was a overhyped story of epic proportion. I'm glad we made some money there, or I don't think anybody lost money. I think I was out in time. But We shall see. It's down at 55 now. I think that has more room to run to the downside. I think they're the next Tesla story with the hydrogen truck. The CEO squawking about overtaking Ford. Okay, buddy, let's simmer down on that plan. So Nicholas Short, kind of light. All right, we're going to switch over to the big board, and DAL is another one. We don't need to pull the chart. That's Delta Airlines. Okay, so what we've got here is a new layout for you. Hopefully you like this a little better, and I'm trying to bring more contrast to you. Shout out to my tech for coming up with this arrangement, and then we're going to be able to zoom in a little bit after the market opens. So as he's doing right there, so very nice. So we'll do that across the board and take a look here. So on the left, let's see, Predator's in with this trade first. So let's look at what was it, KSS short. So KSS on the left. I kind of like short and NEO, so let's put NEO in the middle. I'll put my trade in there for a second, and then we'll wait for when somebody pops up with their trade, Burner, Geach, whoever, Jumper, whoever's in next with their trade. I'm going to go ahead and enter mine now. Market's still down about 900 points. Okay, when I look at NEO, if I have the mouse for a second, when I'm looking at setting my entry, so I'm going short. So I'm going to say, how much is this going to back up? Well, I think it's going to fall down. I'll probably end up taking it around 570 or so. So I could go with a 10-cent stop is what I think is going to happen. So as this continues to march up into the open, I'm kind of watching to see where this peaks. I don't think it's going to go straight up and continue to climb into the open. I think it's basically going to open somewhere in here and then pop up at the open and then sell off. So I want to give myself enough room for that to happen. So 10 cents is probably about right. This has been a kind of a name and play, so I'm going to give it 15 cents. And again, if you're using the spreadsheet, then you can reverse figure out what that is in relation to your R. So I'm going to go with a 15-cent stop. So I've got NEO short, 15-cent stop. I will go in at, I do think the market's going to sell off right away. So I'm going to go in at the open and out at the 5-minute point. Actually, I'm going to go 4-minute point. So again, that's why I'm setting it up for the daily day trading challenge. How we're going to do it in real time is just kind of watch the open. And then if there's a straight move down right away, then I would take the trade on a day like today. That's different from what we've seen in the past, where you kind of, on an up day, you got to kind of want to wait for short covering to take place and that to go up and then take the ride down. Today with a big market red already and negative headlines, you can expect to see that things will move down much quicker. All right, I see B&O in there. Let's go B&O on the right screen. So here's that zoomed in view. Hopefully this gets you a little bit better insight as to what's going on. All right, a little low on the volume there on B&O. So we'll see. Let's put SPY over here to the right on a different screen. I'm going to have the SPY up on a different screen just so I can see if the market's selling off hard or not. Okay, back to, so there's Luckin bouncing. Huh, that's interesting. All right, we got Geach, Luckin shares short. We'll leave Luckin up in the right. We'll take NEO out since that's my trade. We can come back to that. So in the middle, let's put B&O. And refresher, B&O is what? Put B&O in here real quick so I can just see it and then go back to SPY. Got 1 minute till the open. Oh, it's an oil trade down. So betting oil is going to fall off here. So, okay, you can go back to the SPY. All right, make sure the volume's up and we'll get ready for the open. Interesting now, Coles is kind of bumped up. That could be good for the setup. kind of like that. LK. Yep, that's good for your setup. All right, there's the open. Look at LK striping down immediately. So 10-cent short, so you can draw his open up there at 344. So Geach, we're on your trade here first. So 344. So 3R would be down at 314. So basically all the way to the bottom, you can draw that 316 or so. That'll be close enough. So nice move down there, Geach. Again, you're already at an R, and it's continuing to stripe down. The SPY is actually, it's right sitting right at 2.5. So it didn't actually, the bottom didn't fall out of the market here. That's why I want to keep that up. Okay, KSS is looking good. We're not in it yet. B&O, short at open, 15 upper stop. So let's draw the B&O if you want to. You can probably zoom on that. Give yourself a little easier time. Nope, it's the next one. There we go. So there's your open at 10.20. So we'll get that drawn there, and it is with a 15-cent upper stop. So up at 10.35, it's off the chart. You don't have to worry about it then. And then so is the bottom there, so we'll keep that open. And let's see, over at KSS, in at the 2-minute point, out at 5, or after a circuit breaker. The market doesn't look like it's going to circuit breaker out. So proud of the market holding strong here. So next bar will be your open for burner. For Apex, excuse me. Okay, there we go. The top of that one is going to be your open. And it is a 20-cent stop on Kohl's. So it's at 21.86, and then there you go. Probably won't get it. So 21.86 is the stop. We'll just keep an eye on that. And then the down to the downside would be 60 cents off of where it opened there. So down to what, a 21 for the downside for your 3R point. Okay, Luckin's backing up. B&O's hardly moving, so you're going to be in that trade. You don't have to worry if it doesn't have the volume to kind of splash you out of the trade there. So that's more of a slow cooker, if you will. All right, on Luckin, we got a 10-cent stop. So we got up to 354. That held. So as long as it stripes down from here, you're good. Market's showing some strength here. Only 800 down on the Dow, and that's on the rise. So again, we're keeping an eye on Luckin. And B&O is not really moving, so that's easy to keep track of. Let's check mine, NEO. Again, this is a NEO short. I said I was in at 2. All right, so the green one there, the bottom of it, my entry would have been right there at 570. And 15 cents is my stop, so 570 would be 585. It barely held that, so I'm still alive. Kind of keep that up. All right, Luckin's still alive, and Kohl's, if that's the open, can you draw a little circle by that O out there? Look at that. Open. Oh, it's a straight line. You can't draw a straight line. Got it. You don't need to try to make a 4 square kind of thing. So, all right, NEO's about stopped out. Luckin is Luckin halted. Check down here. I think Luckin's halted. That's why it's not moving. But that doesn't look like much of a trigger for it to be halted. So we'll check on that. It's not showing halted, so, but it's also not moving. Well, maybe that was a chart thing that we had going on there. All right, so Luckin will be killed as far as the trade. Up 354 is where it had to hold. It didn't hold that. When you look at this entry, honestly, what's this, 6 minutes in, 5 minutes in? That's that double top you like, and then the big red stripe after that. So again, if you were taking this real time, you might be able to take the trade right there. All right, let's zoom out on NEO. It's still moving, but the chart's not moving. So we'll continue to troubleshoot as to why this would be. So, okay, Luckin, I needed it to hold 585, or excuse me, NEO. So NEO's busted, Luckin's busted. We can put B&O in the middle there. So B&O's still alive. On the right screen, we looked at UAL. So let's take the right screen UAL. Wow, it climbed at the beginning, so people were buying there. I think that's when you, again, we're looking at that entry point at the 5 to 6 minute point. You got the double top. Let's see, let's put a Tesla. Tesla, there's no way that can be selling off, can it? If American's up, yeah. Tesla, if you're going to try to take that short, you can give up on that plan. Too many crazies following it. Nikola, let's put in KLA. So that's a good sign. Had to run up for 6 minutes. You kind of have that double top at 59.25. So even taking it here, that looks like it's got a pretty strong trajectory down. We shall see if that holds or not. Okay, back to, let's see what's going on in coals and see if we've held on to that trade. So coals, the entry on that was what, 21.65, so 21.85 would be the stop. It did not hold that, so coals is out. Let's put the SPY in the upper left there so you can kind of see how the overall market's doing and zoom in there. So this is your market action so far. It's a little bit choppy, but hanging in there, showing some strength. So we shall see. All right, B&O is our only trade alive, so let me refresh my numbers on that. So B&O's open was 10.20, and the stop on it is 15, and he was out at the 4 minute point. So that was a short, B&O short. So that would be it'd be 1 penny too high. So you've got the, is that minute 4 we're looking at? Yep. Minute 4 closed at 10.21. So that trade is in the red. So unfortunately that's busted out. So no winner today unless I missed one. I don't think so. Okay. So that's kind of where we are. So that's what we'll keep up on the big screen. Let's look over at the market as a whole. We'll bring up the board to the left. SPY is actually selling off there. You can kind of watch that real time. Okay, what's in the green? Again, I'm referencing all the way to the left there. Treasuries are in the green. So when you think of the big sell-off last time, remember bonds are supposed to act opposite the market. They didn't during the big sell-off there during COVID-19. And largely that's because everything was a fire sale on everything. I don't anticipate that going into the election. I still think bonds are undervalued versus where they should be. So I think bonds are a safe place to be going into the election, and that money flowing out of equities, which we may see the start of today. It hasn't been gross yet, but we shall see. Back to over 3% down there on the Dow. So, and Treasury Secretary just said we can't shut down the economy again. You know, when he says that, I hope he means that in the rest of our lives. I really do hope the takeaway from this is that we don't do that ever again, right? I hope that's the lesson. Anyway, treasuries are the only thing that went up last time. I do expect that bonds going into the election, if equities sell off, which I expect to a certain extent, I do expect bonds to prop up. So I will be using a bond fund to kind of hedge against that. I like individual bonds, but since I do plan on using a fund this time because the funds are undervalued, and I think money's going to flow in. So Netflix in the green, Activision, and Newmont Mining. So 4 out of the names that I follow on my watch list are up. Everything else is down. So let's check the down to see what most reds out there. Again, we're on the upper left. Those are all options. We do have Delta down 11%. Boeing down there. Remember, that was actually up from pre-market because Boeing was down 11 pre-market. There's our friend Luckin, making us proud. Southwest. So a bunch of names. There's my Neo. DraftKings we always talk about. So that's enough look at the red. All right, let's go back to the trading board. All right, so again, you have the SPY on the left, and then B&O is a little boring. So let's put in NKLA. So actually that's off to the right. So leave NKLA off to the right. You know, it's kind of weird. It's not keeping pace when we're zoomed in. So that's something we'll take a look at. If you look at this is obviously the same chart in the center and the right, and one of them's not keeping pace when we're zoomed in. So we'll keep an eye on that. Maybe we can't zoom as much as we thought, but we shall see. Okay, in the middle, let's put LK so we can all share in the pain. Look at that monster move out of LK up. Oh, ye have little faith. All right, we're going to move on into the chat while you guys can watch that. Let's see what I missed here. Tesla is not an honorable mention. Now, I will tell you, if you're a Tesla investor, you would rather get COVID-19 than give up your Tesla shares. That's just how it is. I got that. That's how this stock's up at near 1,000, if not. It was over it yesterday. We'll see where it ends up today. Bears are coming out of hibernation. Yep, they'll be all over TV. They get to be right on occasion. Good for them. Yeah, and that's why, Predator, I show that chart till the end of time when people start squawking about, oh, my Lord, look how much money I lost today. It's like, well, back out a year and look how much money you've made. And that generally squelches the conversation a little bit. Yeah. Okay. Obviously, I'm bullish on it. If you doubt me on that, you have every reason to. I'm still bullish. We shall see. It's not worth $4. It's worth a lot more than that. All right. All 3 shorts stopped out. Yeah, you know, it's kind of crazy how normally you see the market roll over right away. And this market, even on the SPY, when you look at that chart, it's still backing up. SPY's only down 2.4%. I say only, right? But so that's showing a lot of strength. So that's pretty good that we did not see kind of a panicky move. Maybe Mnuchin, the Treasury Secretary, taking the TV as early might have helped stop that move of the, don't worry, we're not going to shut down your government. So if the panic move was let's sell because we're going to shut down again, he's getting that out of the system, and I don't see Trump shutting us down again. Okay, on into, we're going to take a break from watching that. We'll go into our long-term topic. So look in the Q&A. Now's your time for questions, if you will. What are the stock market circuit breakers and why are they in place? And what are the individual stock circuit breakers and why are they in place? So we're going to answer that by going to Investopedia. So you'll see that pop up about now. So here's your circuit breaker and some of the history behind it. So the idea is to stop the panic and kill the algos. So a couple of us in the room have been talking about taking, trading sort of, everybody's got a specific pattern they're looking for. Can you program that? And then can you have a computer execute it on its own, however you want to, whatever pronouns a computer uses. So the the idea there is you can program it and then just sit there and collect the money, right? So many have tried, lots have failed, many have done it successfully, though, at least while that particular pattern exists, but it doesn't exist forever. However, when the computers are in charge, that's often what you will see. And you'll hear me say the phrase that, you can't beat a computer in reaction, you can only capitalize on the overreaction. So when you think about how we handled COVID-19 and the 35% move to the downside, that was panic selling and computers in there that people are just doing the sell all kind of, get me out of my portfolio thing, and then letting the computer put in a whole bunch of market orders and dump all that stuff. So computers run rampant, can make these whole moves. Can't beat them, but you can take advantage because they tend to overreact. Well, the circuit breaker is in there specifically to stop, to kill the algorithms, and to let everybody chill out for a second. So that's why they came about. I did not have time to preview this, so we're going to go through it together. 7% is that big move. So when you think of where were we this morning, we weren't at quite 3% on the S&P. We're sitting a little over 2.5 right now. So basically that same pre-market move, if you double that, we're getting close. And what's weird is when you get close to the circuit breaker, you almost always hit it. And here's why. Because as you approach that, people need to get out of stuff, because especially traders, because it's about to get halted. So as you get into the it's about to get halted zone, then it kind of forces it to get halted. It's kind of like when numbers that get above 9 tend to hit 10, or numbers dropping, if they get to 11, they tend to break 10. All those stupid things that aren't related to the fundamentals of a company whatsoever, but humans being what they are, they see those things and actually move on them from there. Let's see. So you have 7%, 13%, and 20%. 20%, if I believe right, is a done for the day kind of move, but we'll see. I think the times are down here a little bit lower. There's some examples. There's our two limit downs. They were right at the open. I believe they were both Mondays. In fact, I know they were both Mondays. One of them, this March 9th, right here, was the March 8th was the Fed half a point rate cut. All right, first in place from the crash. I often talk about I started my investing journey in 1986, so got the big smack that first year, so you got to see that. That was Black Monday. Flash crash, 9% in 10 minutes. So yeah, for those that tend to get excited, this is not necessarily the thing that you need to be doing, because you will make bad decisions. If you think you make bad decisions normally, wait till somebody puts the screws to you and see what kind of decisions you make then. So that's why it's good to have all this thought out ahead of time, so you can basically be emotionless going through this. I tend to use flying analogies. Several of you have flown in the room. So yeah, you need to know what you're going to do before the airplane starts on fire, because when it starts on fire, you need to be able to have a calm head and go, oh yeah, I've done this before. I know exactly what I'm going to do, and kind of not focus on the fact that you were on fire in an airplane at 30,000 feet, because otherwise that would get you freaked out. So don't think about that. Think about what you need to do to handle it. Yeah, I see your question, Predator. I don't think so. I don't think we've ever hit that 20. I'm not sure we've ever even hit the second stop in a day. Okay, here's your individual securities, and here's really why, again, I had my tech bring this up, so I haven't looked at it. Individual securities can be triggered regardless of whether the price is increasing or decreasing. It's only downside for the overall market. I didn't read the book Flash Boys. Again, it's all about the laying fiber across the country and being able to scalp off trades and by the millisecond. I don't think so, but I listened to it on tape while I was driving, so I probably only caught maybe 40% of it. So yeah, 15 minutes. So I do remember sitting there twice this year, staring at the screen for 15 minutes. Generally, everybody's got their peer group. Money managers tend to be texting back and forth when you get halted, like, oh, that's a good time. So a lot of communications, some client communications on occasion during that time. Most leave their money manager alone to do their work at that time. Okay, single stock. So that's kind of the overall market. Individual security. So these are during your market hours after the open. So it can flop all over at once for the first 15 minutes. But we've seen halts. We saw halts before that. So I guess here's the halts that are most of it. So in the first 15 minutes, you're looking at a 10% move, I would say, for most of them. And then you get into the bigger numbers down here. So it's really 10% at the beginning, open and close of the day in those windows, which is where you see all your volume anyway, if you've looked at the volume bathtub. And that's why you either trade the open or trade the close. Don't trade all day long. And then 5% kind of midday. So that's those are interesting numbers for it to go in place. Okay, so here's what triggers it. This is what I was looking for. So outside of those parameters for 15 seconds. So it can pop down and pop in and out, but 15 seconds of outside of the parameter, it will halt trading for 5 minutes. So now we know. So it looks like maybe at least 5 minutes and then max pause is 10, or maybe that's 2 consecutive. That's not exactly clear. All right, so that's it on the circuit breakers. Again, generally, if you're looking at your app or something like that, you will see it turn yellow. So if you've ever seen a yellow, that's a halt signal across a few things there. Okay, let's clear out the questions. Yeah, I don't remember a 20% drop. There are some, I mean, when you think of history, a lot of history was just made in March. And if you watch my videos from another venture, I kept saying, you know, and we're part of history. You know, history is in the making, just like flying airplanes in combat. It's just like zoom out a little bit when you think about the moves up and moves down have been historic, especially this move back up. Go to the 1 year on the SPY there in the upper left. We'll go back to the charts for the close here. When you look at the 1 year in the SPY, there we go. That was a historic move back up. I think it was 6 weeks or 50 days or something like that. So to think that we've come that far up in that shorter period of time is historic. And of course, it's going to come, market will sell down a little bit. So no big deal there. All right, that's what I've got for today. Thank you so much for listening in. No winners for the daily day trading challenge. And we'll keep an eye on the market. I do plan on taking some risk out of the portfolios today. This was kind of the warning shot if we don't end up big red here. So that's what I'm gonna do for the next couple hours. You can see some moves in portfolios. SPXB is my favorite bond fund that will be popping up, if you will. So with that, I'll let you go. We'll see you back tomorrow morning. Thanks. Bye.